Thank you everybody for joining us tonight for our U.S. Expat Financial Seminar. We have two firms presenting. Our firm, Euro American Financial Advisors. I'm the president, Shane Clark. I'm joined with my partner, Tom Sneed. And we also have Wicklow Tax presenting on U.S. tax obligation and filing issues for U.S. expats with Thomas Sneed. We're going to try to cover everything at somewhat of a high level, hit the high points. We've got kind of a mixed audience. Some folks have been living in Barcelona for years. Some of you might be planning to move. So we want to provide some helpful information on kind of all topics, but not too in depth on any specific area. So with that said, I have to read a little disclaimer here. It says the webinar is for informational purposes only. It is not intended to offer advice or guidance on legal, tax, or investment matters. Such advice can only be given with a full understanding of a person's specific situation. So with that said, let me jump in. So what we're going to talk about is kind of a roadmap of some financial planning issues, and then how it's important to coordinate those services amongst the different service providers. And then Thomas is going to talk about some U.S. tax considerations. And then I'm going to close it out with more in-depth, what is a financial plan, how it's beneficial for expats, and then some high points on considerations for your investment portfolios and investment advice for expats. So let me tell you a little bit more about our firm. We're Euro American Financial Advisors. We're headquartered here in sunny Sevilla, Spain. We've been here. We started the process of getting our license with a MiFID license with the CNMV around 4 years ago. So it's somewhat of a new firm. We're certainly not new to this. My partner, Tom Sneed, he has a firm in San Francisco, International Asset Management, which has been helping U.S. expats all around the globe for the past 20 years. So he's seen it all. He's got a lot of expertise in this field, and we really wanted to get kind of a base in Europe to help specifically European clients all over the continent, but specifically in Spain, where we're headquartered here. And I think we'll start with this slide. So we've got a U.S. expat checklist. So something we do and we tell our clients is when they first come on board, we like to act as a general practitioner. So we like to say, if you have an issue with real estate, immigration, legal matters, estate planning, a tax filing in the US, tax filing in Spain, to come to us first and help us coordinate everything so everybody's on the same page. So this is kind of a checklist we have in terms of issues before you move, issues following the move, and then ongoing issues that we need to keep an eye on, somewhat on the back burner. We want to make sure that they're addressed. And then I won't go through all of these. Visa could be working with the immigration attorney to make sure that you get the correct visa before you move to maximize, your tax situation, both in the US and in Spain as well. Real estate, this is an important one. Even if you've lived, in Barcelona for 20 years, perhaps you're selling a house in the US, that's going to affect your tax obligations in the US, in Spain. It's going to affect your portfolio, what you do with those proceeds. So it's important to keep in mind coordinating those services between all of your different financial partners. And that's part of our holistic view there. US brokerage account issues. A lot of people have these, once you become an expat, you send an email, tell your broker that you're planning on moving overseas. They say no problem. They get back to you maybe a few weeks later after they've sent it through their compliance department, and they can't work with expats. It could be a FATCA issue. It could be just an internal compliance rule on their side. But usually it's hard to have your account maintained with your US broker once you become an expat. And this changes all the time. A couple of months ago, we received emails, some of our clients who had accounts with Wells Fargo, they were closing their accounts. There's a couple different options you can do there. You can work with a broker in the US who specifically works with expats, such as Interactive Brokers or Charles Schwab. And if you work with Charles Schwab, for example, as well as using a registered investment advisor, you can buy US exchange traded funds in your account. So we often get that question. Some portfolio considerations to keep in mind. We'll talk more about this later on, but obviously once you become an expat, there's a whole new kind of level of risk in the currencies. So the underlying currency of your portfolio, you might be used to having dollars before. Once you move overseas, and you've got to consider the euro and what happens with the exchange rate between the euro and the dollar. The next one we've got down here is currency transfer. What's the best way of transferring money from your US dollars to euros? We can talk more about that. There's lots of options. Using a currency broker has been quite popular recently, but those prices are starting to go up a little bit. So perhaps now the best way to do that is using your actual broker to transfer that currency. I've highlighted creating an investment plan and sticking to it. And this might sound basic, but if you think in the past couple of years, we've had a lot of volatility in the markets, particularly with COVID, and then the war with Ukraine, interest rates, inflation. There's been a lot of things, and I think a lot of times it's easy to feel a panic. Maybe you want to pull some money out of the market, and oftentimes, if you use the COVID example, a lot of folks wanted to pull the money out of the market, it tanked, and then it went straight back up. So you never really know what's going to happen next in the market, and that's part of our job is managing your investments and making sure that you stay calm and make sure you get those kind of long-term gains. Bank accounts, if you want to manage a bank account in the US, that can be quite difficult for expats. There are a couple solutions, a couple banks who will work with you even with a foreign address. We can help you in that regard as well. Accessing government benefits. This is one I think Thomas is going to talk about as well, but accessing your Social Security from the US as well as in Spain, this is important to make sure that you're getting as many of the benefits you can. And then we have helping parents with financial issues at a distance, or children. This can be difficult if you have to wire money or if you have to use a notary in the US. These types of issues that it's good to have a plan going in ahead of time so there's no surprises later. So now I'll turn it over to Thomas to talk about some of these US tax issues.
All right. Yeah, my name is Thomas Sneed. I'm a CPA and I take care of people's taxes. So my idea here is to kind of run through these things, touch on them lightly. I don't know, what the audience is like. Some have more knowledge than others. So anyway, I'll touch on all these points, and then we'll do Q&A afterwards where somebody might have specific questions. So the first thing is what's your responsibility, fiscal, meaning tax-wise? And essentially, if you're American with a passport, American citizen or a green card holder, you're essentially American. You have to do it. You're supposed to do a U.S. tax return, declaring your worldwide global income, and that doesn't matter where you live. If you don't earn enough, if you're employed and you earn less than the standard deduction, which is around $13,000, it changes every year, you don't have to do a tax return. But essentially, if you're working and you have a salary that you're living on, you have to do a U.S. tax return as well as a Spanish tax return. So that's your first responsibility. Second one is there's foreign bank account reporting for Americans, no matter where you live again, but most of my clients are in Spain. And essentially it's called the FinCEN 114A is the form, also known as the FBAR. And you have to declare all your bank accounts and the account number, the address, the bank, all this information on the form. If your global amount is over $10,000, and global amount meaning not on a per account basis, it's actually, you could have 5 accounts with nothing in there and then another account with, 20,000, you'd have to do the FBAR. So that's a very important thing to do. The headline fines, if you don't do that, are quite oppressive. I don't see them handing it out a lot, but essentially they can fine you if you don't do it. So that's one of those things you have to keep in mind. If you don't do your tax return, which I don't recommend, and you don't owe money, there's not really a fine. But essentially your 2 responsibilities, and I wouldn't bear off of that, is do your taxes, do your FBAR. And I think we can go on to the next. There are, one quick thing. There's estate tax returns and gift tax returns. So, and that'll be on the next slide. So I think, Shane, we can go to the next slide. I'll get to the estate tax things after this, but your due dates. So your taxes, everyone probably remembers, it's basically the 15th of April. This year it was the 18th of April because there was a holiday, but essentially it's the 15th of April. But if you're an expat, if you're living outside the US, you have a 2-month automatic extension. So you don't have to file by 15th of June. Sorry, by the 15th of April. You can file by 15th of June. If you owe US tax, which some people will, and that's a little deep for this conversation, but I'll touch on that. For example, if you have US-based dividends, you may end up owing US tax as well as Spanish tax. If that's the case, you have to pay by the 15th of April or you'll get an interest charge. So the extension extends the time to file, but not the time to pay. We can also extend that 15 June deadline to 15th of October, this year, the 16th of October, if you file that form 4868, which I do quite often, because the tax deadline in Spain is 30 June. A lot of people aren't ready to file in the US because their Spanish tax return is not ready. So I extend a lot of people to the 15th of October. The FBAR, it's kind of a funny one. They tell you that it's due on the 15th of April, but they give you an automatic extension to the 15th of October. So essentially, it's due the 15th of October. I do it with my clients. When I file the return, I file the FBAR, and that's probably a good practice so you don't miss anything. And that's it for deadline. We can go to the next one. So who's going to owe tax to the U.S.? So, you know, most people will not, most people living in Spain will not owe tax to the U.S. because there's a Spain-U.S. tax treaty, which says, you know, which essentially rules out double taxation. So the only people that will owe tax in the U.S. are people who have dividends. And it's not guaranteed you'll owe tax, but it's a possibility. If you have a lot of the U.S. dividends, the U.S. under the treaty can tax those up to 15%. And it gets a bit complicated when you have dividends, and because Spain will tax those dividends at their rate, which is around, you know, between 19 and 26%. So you're going to pay tax in the U.S. first, and then take a credit against your Spanish return. The other instance where you're going to owe U.S. tax, there's two more that I'll just hit briefly. One is if you have a real estate in the U.S. that you're renting out because it lies in the U.S., the U.S. sort of gets first crack at that, and you're probably going to owe state tax. And if it's in New York City, you'll probably owe New York City tax. And the other one is Social Security. I don't know how many people out there are retired, but unfortunately, we'll all get to that age at some point. In which case, the U.S. under that treaty reserves the right to tax Social Security first as well. And all these things are taxed by Spain, but when the U.S. gets the right to tax first, they can take a credit against what they'll pay in Spain. And that works the other way. When you're living in Spain, what you pay in Spain, what Spain gets sort of first crack at is, you know, your income, where you earn the money. If you're self-employed, if you're employed, it's where you do the job. So you're living in Spain, you're going to pay tax to Spain. Interest income is actually taxed where you live in Spain. And capital gains not on property, because property is where it sits, but capital gains, if you have a brokerage account in the US, Spain taxes that first, and then you take a credit. So anything that Spain taxes first, wage income, self-employment income, interest, and capital gains, you take a credit against what you pay in the US. So there's sort of, the credits are going back and forth. There are some instances, which we'll see soon, where there is actual double taxation, which is unfair, but there's ways of avoiding it. And this is something that's relevant to what Shane's going to talk about as well. Just two quick things on this. There's one way of there's something called the foreign earned income exclusion, which you may or may not know about, but if you live outside the US, you're able to exclude from US tax about 110,000 of your earned income. So that means income from self-employment or employment, not passive income, which is dividends and capital gains. That's one way of not owing US tax. The other way is by using foreign tax credits. Normally, in Spain, almost always, unless you're under the Beckham law, which is listed in line B, you're going to pay more tax, income tax in Spain than you would have in the US, because taxes in Spain are quite high compared to the US. So most clients, it's better to use foreign tax credits, because using foreign tax credits also allows you to get an additional child tax credit, which I'll mention later. It allows you to maybe put money in a Roth IRA if something you want to do. IRAs are not usually a great idea because that opens you up to double taxation. So foreign tax credits generally is what you use. A lot of accountants might use the foreign earned income exclusion because it's pretty simple. It's straightforward. It works, but it's not always in your best interest. The self-employment tax exemption, if you're self-employed in the US, you pay self-employment tax, which is Social Security. So you have income tax, and on top of that, you have to pay 15.3% self-employment tax, which is your Social Security payment. When you're employed in the US, the employer pays half and you pay half, and it comes out of your paycheck. But when you're self-employed, you are both the employer and the employee, so you pay both. Now, the US wants to tax you on that, but if you're in Spain, there's what's called a totalization, Social Security totalization treaty, and that exempts you from any US self-employment tax. Because if you're in Spain and you're autónomo, you're paying self-employment tax to your autónomo. Okay, so moving right along, the 89, here's some forms that you might have to do. So the FBAR is what I talked about. If you have a fair amount of money higher, the FBAR is quite a low threshold. It's 10,000. I won't go into the 8938 thresholds, but essentially it's more or less 300,000 if you're single, married filing separately, or 400,000 if you're 600,000 if you're a couple, if you're married filing jointly. So that's something that goes on your tax return. The FBAR goes to the US Treasury, 8938 goes to the IRS, and that's their sort of way of making sure that you not only declare your accounts, but you declare the income from those accounts. 3520 goes back to what I talked about a few minutes ago that I mentioned about estates. It's a form that a lot of people don't know about. If you get caught out on it, it's a ridiculous fine. It's like a $25,000 fine. Sometimes it depends on the amount. It's a bit of a silly form, but a lot of these things are. It's informational because where it comes into play with most of my clients is they get a gift or they inherit from a non-American. And if you inherit more than $100,000 from a non-American, you have to do this form, even though it's not taxable. You can get millions and millions from a non-American, and it's not taxable. One thing to keep in mind when we're talking about gifts and inheritances on the Spain side, I'm not a Spanish tax person. I don't do Spanish taxes, so you always want to have an expert in Spain. But Spain taxes the beneficiary. So if you're living in Spain and you get an inheritance from a parent or anyone, for that matter, from the US, Spain's going to want to tax that. The US will tax the estate, but only if it's around 12 million now. That could change, but there's quite a bit of leeway on the US side, and it's a different law. It's common law in the US. They tax the estate, whereas in Spain, it's civil law, and I'm not a lawyer, but just throwing those terms out, they tax the beneficiary. So you kind of get it from both sides, and it can be a rude awakening for people, so know that that could happen. The 5471 is a real sort of nightmarish form that I don't really like to do. But if you own a company in Spain outside the US that you control, so if you own over 50% of the company, or if Americans, and this gets a little into the weeds, but an American shareholder is essentially someone who's American that owns 10% or more of a company. If over 50% of the ownership of that company is US shareholders, American shareholders, you have to do this 5471, which it's a very complicated, expensive form to do. I sometimes tell people if you can avoid setting up an SL, you're better off being autonomo, but that's on a per case basis. But this is an important form. Big fines if you don't do it. And it's not just informational anymore. There are tax issues that are involved with it. Most people, almost all my clients in Spain don't have an issue because the way that the rules are written, you get exempted for a high tax exception. And that's something that I won't go into, but essentially got to do that form if you fall into that. The 8621, this is, it kind of goes into Shane's wheelhouse. That's a form. So essentially, you, as an American, you do not want to own mutual fund, like investment funds. Mutual funds is a generic term. Any investment funds, ETFs, hedge funds, investment funds outside the U.S. You can do it. There's no law against it, but the taxation on the U.S. side is complicated. I won't go into the details. It's punitive. If you Google PFIC, you will find out why, because there's a million articles out there about PFICs, we call them. It makes it really difficult for Americans that live overseas to invest because they don't, you can invest in a single stock portfolio, which is not easy. You can't really buy funds unless you want to really get crushed with taxes, and it's really just not worth it at any point. And Shane will have a lot to talk about that because that's where he sort of comes in because he manages people's money. Moving on, I'll just touch quickly on these. One thing that's not on that list that I wrote down, if you're American, if you're filing green card holder or American, if you have a filing responsibility and you have children that are American and have a social security number, you're eligible for the additional child tax credit. And that's a real nice bonus being American, because essentially that's a refundable credit, partially refundable. It's a $2,000 credit. That $1,500 is refundable. So my clients who have American children under the age of 17, depending how much they earn, but the thresholds are quite high, will get a check from the U.S. for that $1,500 per child. So it's something that you don't want to miss, because it's essentially the IRS giving you free money, and that's not something that comes around often. The 720 is a Spanish tax form, and it's essentially the Spanish version of the FBAR with some nuances. Spain wants to know if you have money outside of Spain, and if you do, they want to know. And there are wealth taxes in Spain. There's a new wealth tax, which is a national wealth tax. There's a wealth tax in Catalonia, which has been around for quite a while. And now there's a national wealth tax. And that national wealth tax sort of essentially throws Madrid and Andalusia into the mix because they didn't have a wealth tax. But all the other autonomous regions have wealth taxes. So anyway, that's something. And there's always a debate whether the IRA or the Roth IRA goes on that because that can make a big difference in your wealth. That's a question for a gestor. One thing I just remembered that I forgot to mention, getting back off topic. If you're on the Beckham law, which is a special law for expats that move to Spain, some of you are probably on it. And now they have some new laws called the digital nomad law and the law of startup law, which is if you start a company in Spain. So essentially, you get a great tax treatment. You have a 24% flat tax. You do not pay any tax in Spain. And don't quote me completely on this, because again, for a gestor, but essentially, most of your earnings outside of Spain, like investment earnings, are not taxed in Spain, so you pay U.S. tax. That's a 5-year deal. You don't have to do that 720 when you're under Beckham. You're not subject to wealth tax. Digital nomad and the law startup are similar situations. I don't know about the wealth tax. I've heard that national wealth tax, that's quite new. That came in January. You can't get out of that, even if you're on Beckham. But don't quote me on that. I think that's the case. IRAs and Roth IRAs, Spain recognizes an IRA as a pension, except only in the sense that when you take distributions out, they're not going to tax what happens inside the IRA until you take distributions out, and then they're taxed at your income tax rate, just like the US. You can put money in an IRA. It's probably not worth it because because you're paying such high taxes in Spain. The tax deferral in the US doesn't really help you. And you're going to have to pay tax again on it anyway when you take it out. So you're kind of double taxation. Roth IRAs, not recognized in Spain. It's essentially a taxable account. Not a bad idea to put money in there if you're only in Spain for, a short time, because when you go back to the US, that will come in handy. So that's something that should be in your toolbox. And I'll run through the rest here quickly. Windfall elimination provision essentially is kind of arcane law, which they say might be repealed, but you never know when they say something's going to be repealed because it never seems to happen. But this law essentially is the US Social, if you take US Social Security, you retire and you get US Social Security, and you're getting a Spanish pension because you've lived 30 years in Spain, but before you moved to Spain, you lived in the US. The Social Security Administration will cut your US Social Security payment. It's hard to make that calculation. It's not really clear cut, but they will cut it. So, you should budget that. They do have a calculator online where you can input your Spanish, what you think you're going to get from Spain, and they'll tell you what you'll get from the US. So it's good to have, and it's good to set yourself up with a Social Security account. It's not easy if you don't have a US phone number. I think there's ways around that with like Google. We talked about that, me and Shane, about like Google numbers and things, but a lot of things with the IRS and the Social Security, if you want to set things up, they want to send you that third-party verification through a phone number, and a lot of people in Spain, you don't have US phone numbers. So it's something that you have to rectify, and sometimes you just get a throwaway number in the US. House sale, really quick. If you're moving to Spain, sell your house before you become a tax resident in Spain. You don't get the $250,000 exemption like you do in the US if you've lived there for 2 out of the last 5 years. If you were thinking about moving this year to Spain and you're watching this and you're going to sell your house, don't move to Spain, sell it now, and then move to Spain. And well, anyway, you'll talk to a gestor, but if you move to Spain in July, you're not a Spanish tax resident and you won't be liable for Spanish tax on that house sale. Because in Spain, to be a tax resident, you have to live there for 183 days. So if you're moving to Spain, just wait until, after that 183 days passes, and you'll save yourself a lot of money and headaches. Lastly, that I'll touch on is the LLC. If you're a US person and you have an LLC, which is a disregarded entity, it doesn't help you with Spanish taxes. I've had that question, and Shane mentioned that to me. You essentially, it's autonomous. All that income passes through to you in Spain, and you'd have to, pay tax on that in Spain. There's an S Corp, which is a version of an LLC, but it's the same because an S Corp, you take a wage as an employee of your own company, possibly. The rest of it's pass-through income. The only way you might lower your tax or do something with taxes in Spain is if you have a C Corp, and only if there's a permanent establishment in the US. It can't just be for the purpose of doing this. You have to have some business that you do in the US. I think that's it, right, Shane, for me?
Yeah, I think so. Something I thought of.
Yeah.
Go ahead. Sorry.
No, I was going to comment that I hope I didn't run through it too quickly, but time is of the essence. So.
I was going to mention something. If we're trying to get, texts from the US, something we tell our clients to use is an app you can download from the App Store called Cloud SIM, and that works for almost everything. I believe it doesn't work for Citibank for whatever reason, but for most purposes, that works pretty well. So jumping into this, also before I do, if you have any questions for either Thomas or myself during the presentations, just pop them in the question and answer box. And then at the end, we'll have a little session and shoot through those. So something here we're going to talk about is financial planning. We're going to talk about what is a financial plan, but also what is it for and why do we do it? One reason we do it is peace of mind. For our clients, it really helps you get everything in one spot. You can look through the plan we put together, see all of your assets, see how everything's projected into the future, and see it gives you, a nice feeling that you will achieve your financial outcomes or you won't, and you need to change it up. So I think it's a good tool. So what is a financial plan? We say it's two parts. There's a numbers part and a non-numbers part. So the non-numbers part is trying to take what you want to achieve in terms of, buying a beach house in Cadaqués, sending your kids to university, retiring back in the US, whatever types of goals you have, that's the non-numbers part. And then how we fund those is the numbers part. So the numbers part is we take your personal income statement, statement of cash flows, and balance sheet, and then we project those into the future. And we have some pretty nice software that runs some Monte Carlo simulations, and then it projects a probability on how likely you are to achieve your desired outcome based on the growth rate of your portfolio and cash flows and everything else. And I think it's a nice, it's a nice tool, but also it's a nice way to help inform your accountants, us, on how to invest your portfolio, and then also for making decisions. So if you're planning on moving to Barcelona, you're going to have a big change in your lifestyle, in your expenses, in your costs, everything. You might be buying a new property. So it's a good time to create a financial plan. If you've been in Barcelona for a long time, it's also nice to kind of project things into the future and see where you might need to make some changes in your lifestyle. A couple of examples we give is buying a property versus renting. You can look at that pretty easily, looking at the numbers in the present time, but then projecting that into the future, the decision becomes much clearer with some software behind it. Planning for retirement, analyzing a cost of living change, perhaps even you're moving within Barcelona. Something we get asked about often is funding accounts for grandchildren. What's the best way to do that? How much money do you need to save? How that money will grow over the course of the grandchildren's lives? Or particularly, sorry, if you're planning on funding a college tuition for them. And then inheritance. There's, as you know, as an expat, it's pretty gnarly if you're inheriting money from France, but you live in Barcelona and you've got kids in the US, having everything kind of in one place for your estate attorneys to look at is also quite helpful. And then, as I said, the financial plan also helps inform us on the investment side. Perhaps you do the risk questionnaire, you want to be quite aggressive, and we do a financial plan, and it turns out you're better off than you thought. Maybe you don't need to be as aggressive. So that's something that's important to have as well. Here's some top financial issues for expats. Custody, this is probably the biggest one, where your accounts can actually be held. So which broker, which custodian you can use. Oftentimes, US custodians don't want to work with US expats. So just finding someone who will work with you is pretty difficult. And then as Thomas said, if you open an investment account at a private bank, they'll work with you and they'll sell you funds, mutual funds, exchange traded funds, things like that. Sometimes even money market accounts, but those are treated as these passive foreign investment corporations for your US tax return. And it creates, a whole mess on that side. So finding where to custody your assets is very important. And then if you custody in the US, which is what we recommend, for example, with Interactive Brokers, it's a multi-currency account. They are going to give you all of the tax forms that you need for your US return. And this makes Thomas's job much easier. He'll be happier. If you get audited by the IRS, it makes it much clearer, much easier to defend your case. And then also these US firms kind of break down your account in the tax segmented year-end reports that you need for filing taxes. Safety, that's another big consideration, not as much here in Europe, but US brokerage accounts have this SIPC insurance. That's quite nice to have, gives you peace of mind. I don't think anyone was planning on the last financial crisis. We're not planning on another one, but it's always good to be prepared. Compliance, we talked about that again, IRS reporting, FATCA, FBAR, if you get audited by the IRS, it's nice to have all of these reports that you need in one spot. So our recommendation there is working with a US-based custodian and keeping your money in the US. And then some portfolio considerations. So this is essentially our job, is advising you on your investment portfolio. A lot of times you can't use exchange traded funds from the US in your account. So something that we specialize in is managing an all stock portfolio. We use all individual stocks, business development corporations, real estate investment trusts, in some cases, individual bonds. And we actively manage that also from a currency standpoint. We actively manage the currency. So that's the next talking point. We've got currency swings. As I'm sure you're aware, the past couple of years have been pretty wild for the US dollar versus the euro. With inflation, the US central bank started raising rates at a historically rapid rate, faster than other countries, so the dollar really gained some strength. And then the ECB, European Central Bank, started kind of catching up, so the euro kind of gained a little bit there. But the dollar also is kind of a store of value whenever there's a panic in the world. So the war in Ukraine, for example, the dollar saw a lot of gains there. So it's important to have somebody who keeps an eye on your currency situation. And then as a general piece of advice, we always recommend matching your currency denomination of investments with your expenses. So if you're on a fixed income, you're retired, you're getting money every month from your investment accounts, and your expenses are in euros. If the dollar were to fall drastically, you would see your real kind of income decrease. So what we like to do in those situations is more or less match your investments with your expenses, so you're at least taking care of the retirement. A question we often get asked is, can I borrow or can I own euro-denominated funds in the US? So custody in the US, but still having that euro currency exposure? And the answer is absolutely yes. It's a great market. It's the biggest market in the world. Easy to buy those kind of multi-currency funds. So our recommendation is to invest in a multi-currency, diversified kind of global portfolio. Some other considerations here: diversification. We touched on that, but again, that's one of our areas of specialty we manage. And then also from the risk standpoint, currency. If you're not new to being an expat, that's something you need to account for in your portfolio. Expenses. If you were to invest in Spain at a private bank, the expenses are always going to be higher than if you're in custody in the US. From custody fees, trading. In the US, we're used to having, even in some cases, $0 for trades. It's a free trade. And here it's not uncommon to have 1% of your portfolio for the trade. So we say, what can you control? You can control risk, you can control fees. So it's important to keep an eye on those things when you're choosing an advisor and a custodian. Tax management, how the portfolio is managed has tax consequences. If there's a lot of buying and selling versus more of a tax efficient plan, this is something to keep in mind. And we always recommend building a long-term strategy and sticking to it, not panicking when we see a downturn in the market and pulling out. So here's some questions often people ask: what should you be looking for in an investment advisor? The first question we have is, are you a MiFID compliant advisor? So this is something, are you licensed in Europe essentially? Tom Zakaistel and I, we looked at this a few years back and saw in Europe, there's not in any time soon going to be a decrease in regulation. So it's important to be licensed in the EU if you have clients in the EU. And we think that pretty soon the US-based advisors probably aren't going to be able to work and manage clients in the EU. So it's important from that standpoint to have kind of a future plan with your advisor, but also from the standpoint that people who are regulated in the EU do face a lot more compliance. So it's important to have those kind of safety things in place for you as a client. So which regulatory body are you registered with? For our case, it's the CNMV, which is like the SEC in Spain. You can check on their website. You can search for our name. What is your background? What is your experience in academics? What licenses do you have? What designations? What's your philosophy? Are you continually improving your knowledge of the different markets? Everything else? How are you selling? Are you selling products? How are you getting paid is quite important. So if somebody is selling products, they probably don't have the same incentives for you as a client as if someone charges you a fee based on managing your service, your clients. And then performance-based fees. This, if we were paid, we're not, but some people are paid if they take more risk. So if the portfolio goes up, they get a chunk of that return. So we think that having a performance-based fee can kind of provide a negative incentive for the advisor to take more risk. And then if they're paid by products, that's very common here. You're paid by the actual fund itself or the product you're selling versus from the client. So a lot of times people only put their clients in maybe one fund family versus putting them in the best position possible. The last one is, are you an expat specialist? So you could ask them how they manage currency risk, what sets them apart? Are they familiar with some of the cross-border issues that expats face? All right, this is the most important part probably from my side, mistakes to avoid. So buying foreign mutual funds, PFICs, this is an absolute thing to avoid. It's going to really hit you on the US tax returns. They're going to be more expensive. They're not going to achieve anything you couldn't do in the US for lower cost. Buying non-US compliant insurance. This would be in terms of life insurance. If you were to get life insurance in the US, it might not be valid in the EU, so you'd have to check that. And then health insurance. If you have health insurance here in Spain and you travel back to the US, it might not be valid. So you want to make sure that your insurance is compliant in both jurisdictions. Over-investing in your country of residence. So oftentimes clients ask us, before I was totally invested in the US market, I became an expat. I want to be totally invested in Spanish companies. And this is, a mistake that we always advise to avoid. You don't want to be concentrated in any one country. You want to own kind of a global mix of assets. Contribution to a non-qualified foreign pension. This is going to be a problem on your US tax returns. So you might be taking advantage on your Spanish taxes, but then you're going to have a problem on the US side because it can be treated as a PFIC. So you'd like to avoid that. Or at least speak with your US tax preparer and your historian. Not using an expat specific tax preparer. I think Thomas made a pretty good case there for some of the things you need to be aware of. And also it's important to have somebody who understands the joint tax treaty, not just a generic expat tax preparer, but somebody who understands specifically with Spain and the US. And then paying high fees for foreign investments, which you could have been bought in the US for less. Again, it's just another reason to custody in the US. Use a US broker. Failure to report foreign financial assets on US tax returns. This could be if you bought shares in a specific company overseas. It could be if you have, an SL in Spain. There's lots of things you need to work with your tax preparer for to avoid any types of surprises. And the last thing is always do nothing. You always want to be prepared. You want to do your research, make an informed decision, something you're comfortable with. And certainly enjoy, being an expat. Let us do the worrying for you. That's what we like to say. So if there's any other questions, go ahead and pop them in the Q&A. Here's some contact details for both Thomas and myself. Euro USA FA is our website, and Wicklow Tax is Thomas's. And I will switch to the Q&A session now. Okay, so first question. Are taxes assessed in Spain for those who hold a non-lucrative retirement visa? I think that one's probably for you, Thomas.
Okay, yes. Short answer is yes. Yeah, if you live in Spain, you're subject to tax on your worldwide income, whether you have on your global income. If you're a tax resident in Spain, whether it's you're on a non-lucrative or any sort of visa.
Okay. The next question is, will your slides be available after the presentation? The whole presentation is actually going to be available on our website. It'll be on YouTube, but you can go to our website for a link to it there. The next question is, can you take both the foreign earned income exclusion and the foreign tax credit on your US taxes, or just one?
You can take both. Yeah, if you earn more than the foreign earned income exclusion, if you make $200,000 a year, the exclusion's around 110, and then you can apply the taxes paid to the rest of that. So yeah, you can definitely take both.
Okay. Here's another one for you, Thomas.
Yeah.
What about capital gains taxes? Do I have to pay them in the US and Spain? I sold 2 houses last year, one owned by me, one I inherited. How can I maximize the profit on those houses? that might be more of a specific case.
Yeah, that's pretty specific. So I can't answer like some of that question, but essentially, yeah, I mean, you have to pay tax in the US and Spain. It's not, it's not a double tax. For example, you sell the house, if it's in the US and you owe $30,000 in tax in the US, you pay the US. Now Spain's going to look at that and maybe they say, well, you owe us $50,000. Then you'll take a credit and you'll pay Spain 20. So essentially, no double taxation, but definitely subject in both countries.
Okay. This one is, if you own property in Spain, you need to make sure that it will go in a will to your grandchildren when you die, or will it automatically go to your children without a will? I would say that's probably more of a legal question.
Yeah. Spain, it depends where you live in Spain too.
Yeah.
But I would say, you want to have a will in Spain, and you want to have a will where you live. Yeah, it's more of for an estate lawyer, but I think in Spain it will go automatically. Like in Catalonia, it will go automatically to your children and it'll get split. There's rules on that. Spain's a bit rigid. It's hard to write your children out of your will if you're that way inclined. But anyway, yeah, I think I don't know the real answer to that. That's more for an estate lawyer in Spain.
The next one is a primary residence in Spain considered a foreign investment?
It's not if you're thinking about putting it on an FBAR or the 8938. It doesn't have to go on those forms. If you're renting it out, it goes on your tax return.
Okay.
And you missed that one from this unrealized capital gains. Do you see that?
Oh yeah, our unrealized capital gains, such as on a mutual fund taxed by Spain.
No. No, there is a case. Well, no, the answer to that is no. But this PFIC situation, if you're in a PFIC, the US, there's the best case scenario is called the mark to market. So if you're going, I'm not answering that question, but I'm branching out into the PFIC thing. If you do have a PFIC, the US will market to market every year, and you will pay tax on unrealized capital gains. So that's the problem with those PFICs, because when you sell it, then Spain's going to want to tax it. So anyway, but the answer to that is no, not.
Okay, next one is, can you talk a little bit more about foreign tax credits?
No. No, I'm just kidding. I don't know. I don't really know what to say. Essentially, the way they work is you can take credit for the taxes you pay in Spain. The way it usually works, sorry, I'm being a bit flippant, but the way it usually works is you pay tax in Spain. Let's say you make $50,000 a year, you pay $20,000 of tax in Spain, maybe. The US wants to tax you 10. So now you take those credits, you pay your US tax, so you don't owe any US tax, and you can carry those credits forward. And those credits are those extra credits that are left over. They're called carry forwards, and you can carry those forward for 10 years. They don't give you can't go back to the US and suddenly you have no taxes. It doesn't work that way, but they can be helpful if you go to a low tax jurisdiction, or it comes in handy a lot of times when people get a buyout, early retirement buyout in Spain. It's not taxable in Spain, but those accumulated foreign tax credits, because the US wants to tax it, will come in handy. So but that's essentially the way that works.
Okay. The next one is, can you file the FBAR form for the past years if it wasn't filed to avoid a potential fine?
Yeah. There's sort of a couple ways going about that. If it doesn't go back that far, just file them. You won't have an issue. There's a drop down there that says, why didn't you file? You could say, I didn't know. If you feel that it goes back far and you're worried about it, you can file it. There's an amnesty program called the streamlined procedure. That's essentially if you haven't done your taxes or your FBARs, and And I won't go into the details of that, but essentially, if you do it, the legal bar to show, you essentially have to show non-willful behavior, which is a low legal bar, like you didn't know you had to do it, and it protects you from any fines for those FBARs. But generally, you know, if somebody comes in and says, I haven't filed FBARs for a couple of years, 2 or 3 years, you just file them. I have never seen anyone get fined. You can get fined, I won't lie, but I have, you know, they're generally, you know, there's the delinquent form filing process, so you can get away with it. Yeah.
Okay. The next question is Spanish severance pay is
Yeah.
not taxed in Spain. Yeah.
Right. That sort of plays into what I just said. It's taxed in the US. Yeah. Yeah. So that's where those foreign tax credits can come in handy when you have extra foreign tax credits, because you get a big lump sum out of a Spanish company and the US wants to tax it, but you can pay those taxes with credit. So
Okay. The next one is, do you have a list of Spanish CPAs that you will work with to file our Spanish tax return? I would say CPA is generally like a US designation. We do have some gestores we work with who can help you file. And I think, Thomas, you know some gestores in Barcelona as well. Yeah.
sure.
The next question is, I work for a US company through remote work here. Does the nomad visa work for this? My employer considers me a resident in the home state, not here. I'd say that's illegal. You want to talk to a lawyer about that one?
Yeah, I mean, I think that's what the nomad visa is for.
Yeah.
Whether your employer consider, you know, yeah, I don't know the idea. You have to talk to somebody, but yeah, I've seen that where people are working in Spain and the employer thinks they live in the US. It's a tricky situation, but that nomad visa is for people that want to work remotely in Spain. And if your employer's on board, I mean, you know, that's up to you. But yeah, that you speak to a gestor because it's worth it. It's worth doing. I think they get, I'm pretty sure they get like Beckham rule tax treatment.
It's a
Right,
good
Shane?
deal. Yeah, it's a good deal if you can get on it. And you know, we have some law firms we partner with for those types of questions that can help you, you know, set it up correctly the first time and avoid any surprises if it doesn't, you know, if it isn't applicable for you. The next one is US citizens that are long-term permanent residents in Spain can receive Social Security in Spain. How does that work? Do you have to pay the international transfer and currency exchange fees?
I don't know the answer to that. I know that they'll deposit it in US. I mean, I think they're talking about US Social Security.
Yeah.
And I know that they will deposit it straight into a Spanish account. And it goes into euros. So I presume that, I don't know how the transfer and currency exchange, I'm sure it's embedded in there. I don't know the answer, real answer to that.
All right, next
I could
one
look
is,
it up.
yeah, maybe reach out to Thomas about that. Are support payments for a divorce settlement taxed in Spain since they are not in the US? If so, is there a limit?
I don't know. I don't know the answer. It's a good question.
If you're a Spanish American citizen, is it best to have a US pension or a Spanish pension?
Depends.
Yeah, I would say
Yeah.
that, you know, it depends. Definitely a case specific and what type of pension.
Yeah, I mean, private pensions, you know, like Shane said, sometimes they fall into the PFIC category. I mean, they're sort of similar, you know. Yeah, that's a tough question to answer. It's not a black and white question, but I think it's good to have a pension wherever you can. So if you have both, you have both.
Yeah.
I mean, the Roth IRA is good for Americans who are going back.
Yeah. Okay.
Right. So that's something that you could.
Yeah, keep that. I'm a self-employed in the US and have been in Spain on non-lucrative. Is it more advantageous to switch to the nomad visa?
My answer to that would be sure. If the tax treatment is what we think it is, the Beckham rule treatment, definitely. I mean, it's a 24% flat tax. Depends how much you earn, but if you earn enough, you know, in Catalonia, it's around 47% over 60,000, something, you know, along those lines. So I think the nomad visa is a good deal.
Yeah, I think so as well. And that's why they did it. I mean, they want to get people here. That makes sense.
Yeah, yeah. So there's definitely tax incentives in the nomad visa.
The next one is our US rental property generates X amount of income per year. How much foreign tax credits can we file? Is there a maximum?
I presume what they mean is in Spain, and I don't know the answer to that question. I don't think there's a maximum. I wouldn't think. I mean, you pay your tax in the US
Yeah.
and you take it as a credit in Spain, but that's a question for a gestor.
Okay. Another question we often get is, can I use a US address on my brokerage accounts and maintain them as an expat? And there's kind of two sides to that. You can do that. Sometimes if the broker finds out that you're an expat, they'll close your account or they'll freeze it. And then you also might be liable for US state tax, depending on which state you're in. So we always advise people to work with a broker who knows that you're an expat and is comfortable with that, and just kind of avoid, any situation there. Got another question. Is your suggestion not to have IRAs and Roth IRAs to get new ones, or should we do with the old ones we already have?
I guess that's for me, right? Tax question. Old IRAs and Roth IRAs, I would keep them. New IRAs, I wouldn't put money into an IRA almost always, but I'd have, it's a case by case, because essentially the IRA, right? You put money in an IRA, and you make 50,000, you put 6,000 in, you're taxed on, your taxable income goes to 44. And then you pay tax when you take it out. So it's tax deferred, but Spain's not going to give you that break. They won't deduct that. You don't get that deduction. Generally they'll treat IRAs as similar to a Spanish pension. They want, you won't get taxed on the gains inside of it. And then you're taxed when you take the money out. It's the same thing with the Spanish pension. But putting money in, you're going to get taxed in Spain on that. So you don't get that tax deferral. So it doesn't really make sense, right? Because you're going to have to pay tax again. So you've paid Spanish income tax, and now you're going to pay either Spanish or US income tax, depending where you live when you retire again. So it's not a good idea. Roth IRA, Spain looks at it as after tax, as a taxable account. The US, it's after tax income. So putting, you go to the example of someone making 50,000, you put 6,000 into a Roth. If you live the rest of your life in Spain, when you take the money out, Spain's going to say, okay, we're going to charge you capital gains because you put 6,000 in and now you're taking 10 out. We're going to, it's a long-term capital gain. But if you end up retiring in the US, it's not taxable. So, sort of my idea with a Roth, if you're living in Spain, would be, sort of set it and forget it, buy your ETFs or whatever you're going to buy. I don't know if you would agree with that, right? Don't do a lot of movement because Spain will want to tax you on in and out. Try and do a long-term sort of, not a lot of adjustments. And then you never know, right? When you retire, you may go back to the US. You never know. And then it's a great deal, tax-free. And in Spain, it's capital gains. So it would be like you have a taxable account. So.
Okay. The next one is, I plan to stay in Spain permanently. Can I reinvest a US-based traditional IRA into a Spanish equivalent type of account without paying penalties withdrawing money early?
No. You get taxed and you pay a penalty. Yeah. So you can't do that. You can't go roll it into a Spanish pension.
Okay. All right. Well, that seems like all the questions. So thank you again, everybody, for coming, and hopefully we provided some good information for you tonight.